Guys, we're going to kick things off with Disney because for the first time ever, we now have a revenue breakdown of how ESPN is doing. Remember, in February, Disney restructured its business into 3 new segments. So one is entertainment. That includes movies, TV, streaming services like Disney Plus, Hulu. Then we have sports, which is all ESPN, ESPN Plus, and then a tiny portion of that is the Star India business, about 5%, and then the park side of the business. So here's what we learned about ESPN. According to that SEC filing, ESPN generated more than $16 billion in revenue and $2.9 billion in operating profit in Disney's fiscal year 2022. What you're seeing on your screen now is the 9 months ending July 1st, 2023. Now, what we did find out from that recent data is that sports revenue is trending down about 1% over the past 9 months. Not so great, analysts have said, but still better than linear networks, which is down about 8.7% on a year-over-year basis. So just interesting to see where ESPN stands, especially as Disney and CEO Bob Iger are searching for that strategic partner to bring ESPN fully over the top. When you think about buyers of the asset too down the line, this is important information to know.
Yeah, I mean, a couple analysts out on the street saying it certainly made Disney look or makes ESPN look attractive when it comes to that acquisition. Another interesting thing I think too is when you take that $13 billion number that's on your screen right now, just over $1 billion of that came from ESPN Plus subscriptions. So not a major portion of how ESPN is currently making money is coming from subscriptions. That's because a lot of what ESPN was doing for a while, it was like a $6.99 product. It's up to $9.99 now, but they really want to push for that a la carte, putting sports and putting a lot of games on streaming and maybe making it $29.99 was one of the numbers that have been rumored out there. You have to think by looking at the financials, that move would make sense and sort of change the streaming product as we know it. For it to be $30, that's more expensive than the $23 I won't pay for Netflix.
I mean, that's such a good point, Josh. It makes me wonder, too, from an analyst perspective, does ESPN come out of this looking like such a cash cow for Disney with that top line number, or does the kind of decline in subscribers make you question whether or not it is the best buy? We were talking earlier about whether or not an Apple gets in on the ESPN play, and I remember talking to Dan Ives about this. He said it's a no-brainer for Apple to come in and pick up ESPN, but I have to wonder whether if you're Apple and you've got this great cash flow, they've been able to stick to the same Apple story for so long, do they want to risk it on ESPN when the numbers are starting to decline a little bit?
Yeah, and look, based on these numbers, you know that ESPN revenue, it makes up about 20% of overall revenue for Disney. So that's a pretty sizable chunk. You mentioned how subscription fees, not a big factor there, but what is a big factor is the affiliate fees or the carriage fees. That was at the center of that big dispute with Charter. ESPN historically has charged the highest amount to pay TV providers, and you're seeing that in the numbers. That's bringing them a lot of revenue, a lot of money. So when they do make this full transition to streaming, how are they going to compensate for that? They're going to charge the consumer, and that price is going to be pretty expensive.
And how high does that price
Probably
get?
$30.
When you go to the bidding table for NBA rights in 2 years, and that deal could be $75 billion. I think at some point, we're going to at least start to see how these sports streaming costs and how big they've gotten for companies. You're going to get a great look at that now by being able to see ESPN's financials.